Good afternoon, my friends. Very important question to ask you. So important that I've decided to stand up for today's show. The question is this: did you just leave 6.5% on the table? Type into the chat, let me know. Did you just leave 6.5% on the table? A lot of people did. Here's what I'm talking about. We have the NASDAQ. From its peak to about where we are now, the NASDAQ has dropped about 6.5%. It's done that since the beginning of April. Right, well, we're about 3 months into April now. NASDAQ is down 6.5%. Are you one of the many that left 6.5% on the table? Don't feel ashamed if you did. We're here to solve this problem. Go ahead, let me know. There's a problem within this problem. And I feel that this problem causes many of us to be a feather in the wind. I was once a feather in the wind too. And the reason why had a lot to do with this question here, this philosophy. Nothing is either good or bad, but thinking makes it so. So, if nothing is good or bad, then we can pop up these charts of the indexes here. We can turn off all the annotations and simply look at the chart and say, you know what? Maybe this is a good time to buy. Maybe I should go all in. Maybe you take the other side of it and say, you know what? The market is rolling over here. Let me start to short. Maybe you start to short today, right? Nothing is either good or bad. Thinking makes it so. So I could come here, take a look at this picture, and think whatever the heck I want, right? That's wrong. That's wrong. And this belief here could get you into a lot of trouble. It's baloney. What you need is to take a stand. What you need is a framework. If you come into the market and you believe that nothing is either good or bad, but thinking makes it so, yeah, that's the point. That's the point. You need to have a framework. You need to have some sort of a system that's going to tell you whether you should be here and buying this, whether you should be selling this, or you should just be completely out. Right? Because if you don't know what to do, that's the thing that's going to be causing you all kinds of confusion. That's the kind of thing that's going to give you all kinds of stress. That's the kind of thing that's going to make you want to tear your hair out. And it's going to give you all sorts of problems with not just you, but with those around you, meaning your family, meaning your loved ones, because that kind of stress that can come from being on the wrong side of the market, that can bleed into all sorts of areas of your life. Trust me, I know, I've been there, and it's not pretty. If you are buying into this logic here without any context, it's bad. It's really, really bad. So how are we going to fix that? That's the question that we're going to work on today. How are we going to fix that? The first thing that you're going to need, you need a framework. And so what's that framework going to be? Well, what's that context going to be? How are you going to have a deeper meaning for what we saw early? Well, how are you going to give this kind of meaning here? Right? Because all these little patterns, all this little yellow and green and red, I'm not just coloring all over the screen. Be helpful if I share the screen. I'm not just coloring these boxes for the sake of coloring them. That is a system that I've created over 25 years of trading. That's what tells me when I should be in the market, when I should be getting heavy in the market, when I should get the heck out or start to short. How did we know to get out way up here and avoid this? How are we shorting over here? It's because of a framework. Market is now down about 7% off of that peak. You need a framework. How do you get this kind of a framework? You get this kind of a framework through history. History helps us learn. We don't need to hop onto the internet or watch some video. We don't need to see what the guys over on CNBC or the girls over on CNBC or Fox Business or any of the major news networks, Bloomberg, whatever. We don't need to go to Twitter or X, as it's called now. We don't need to go over to Instagram or any of these other spots to wait and see what somebody else is going to say. We don't need to tune into the market news. We don't need any of that stuff. None of that is what helped me figure out that, hey, this is the point where you should start exiting. And this is the point where we should start shorting. None of that was a factor. What was a factor and what will help you is history. History, plain and simple, history. There's a few people that perhaps you've heard of them, perhaps you've not. If you have, go ahead and let me know in the chat if you have. A few people that allowed history to help them make their fortunes. William ONeal, John Boyk, Stan Weinstein, Mark Minervini. And now I'm standing on the shoulders of those giants. Me, Michael Lamothe. Each one of these people have books. Each one of them wrote about history in their books. I'll share the names of their books with you. If I had planned a little bit further ahead, I would have had all of them just stacked up right over here. But I actually think I have a few of them right behind me. Hold on. Let me go grab them off the shelf right there. Right, so we've got ONeal, we have Weinstein, we've got Minervini. You see what happens when you keep all the classics at the ready? You can just grab them. So, number one, How to Make Money in Stocks by William ONeal. This book here, this is a great history book. The first 100 pages are all historical charts. What did ONeal do? ONeal went back into history, going back into the 1800s to go see all the different patterns that played out throughout history, to see what patterns and what elements led to some of the biggest stocks in history that had the biggest moves, that moved several 100%, several 1,000%. What were the common characteristics? What were the market conditions? What were the elements for the sector and the group? Were there certain chart patterns associated with it? All that he didn't go to see what somebody else was saying, what some of the gurus was saying. He went and studied history. Same thing with this guy here, right? Funny here, but he wrote this book back in the 80s, I believe. Stan Weinstein, Secrets for Profiting in Bull and Bear Markets. This is another one that's fantastic. Studied history, studied all different kinds of market conditions, came up with technical elements for those conditions. Perhaps the most popular of which was his stage analysis. Well, what's considered stage 1, stage 2, stage 3, stage 4. Real quick, I'll show you. So he says that there's a stage 1 where price is just moving sideways and forming a base. Then there's stage 2 where price is in a defined uptrend. Then there's stage 3 where price is topping out, and ultimately stage 4 where price is in decline. And then the cycle continues. And there's all different sorts of elements to what makes his definition of a stage one, a stage two, a stage three, and a stage four. We're not going to go through all that here. If you want to pick up a copy of his book, it's fantastic. But next, on to the rest of the history lessons. John Boyce's book, Monster Stocks, another fantastic one, goes through history, talks about other stocks that had made monster runs and some of the commonalities among those. He builds off of ONeal's work. Mark Minervini, one of my mentors, Think and Trade Like a Champion, talks about all the different elements that helped him win US investing championships. Goes through history, talks about factor modeling, right? All that. And then there's my book. I talk about factor modeling as well, history. By studying the past, we could stand on the shoulders of giants. That's what helped me. That's why I wrote this. But well, what part of what it takes too, and there's another fantastic book that I was reading earlier today called The Bible that talks about vanity. Vanity. I think that that's an important thing to talk about at this juncture too. Why vanity? The type of vanity that I'm talking to you about is not how we look to other people, right? It's not about checking yourself out in the mirror and getting all dressed up, shaved, putting on a nice shirt, coming on here, make sure that the lighting is okay. That I'm not talking about that kind of vanity. The type of vanity that was spoken about in the Bible that actually came up with the story of Saul. Saul was a king. What was Saul's downfall? Vanity. Vanity in that he cared too much about what other people thought. So why is caring about what other people think a problem, right? Shouldn't we have empathy? Shouldn't we care about what other people think? Well, if we care too much about what other people think, here's how I'm going to relate this back to trading. If we care too much about what other people think, then when we get to this point here and you're looking at this chart and you start to think, well, you know what? This isn't good or bad. Thinking makes it so. Why don't I go over to, I don't know, Twitter, X, Instagram, some newsletter that I signed up for and see what they have to say about this? Vanity. It's caring about what other people think. When you study history, when you study the market itself, that's how you're going to be able to draw your own conclusions. That's how you're going to be able to understand what's going on here, be able to interpret it well, be able to be tuned in to, you know what? This right here, that's a big red flag. And I need to be exiting the market in a hurry. And this over here, this is a short signal. I should be betting on the market to fall. So that way I can start to profit on the way down. Don't need to tune into me or anyone else. It's not what it's about. It's about studying history. It's about studying what's worked throughout history. Stand on the shoulders of giants, and you'll be able to see much further. But you've got to take a stand, right? If you're thinking this way, nothing is good or bad. It's my thinking that makes it so. Well, you know what? Maybe I should hold on, right? It's not so bad. Maybe I should hold on to this one here, SMCI. right there. This is a true market leader. I should hold on. Sure, you know what? I bought, let's say you're the guy or the girl that bought way down here. Say you bought it in January. And you're like, yeah, I nailed that one. I've got, or I had, a cushion of, let's see, well, what is it up? How far did it get? From here, 250%. Big cushion. It's a true market leader. I'm going to hold this one. Well, your 250% is now cut to 100%. 100% still sounds pretty good, right? 250 sounds a lot better. You need to take a stand. What's considered bullish? What's considered bearish? When should you be looking to enter, exit? How are you going to be taking your profits? How much are you going to risk? How are you going to make these decisions? So much of those questions went unanswered for me. And so many of those questions went unanswered for a very long time. And that was with reading all of the books that I shared with you before, right? When, how, why. I thought that I would just treat this one here from ONeal like a cookbook, right? Do exactly what he said. The book is fantastic. It makes a lot of sense. And so I thought, I'm just going to do exactly what Bill did, and that's going to work for me. Well, I found out the hard way that that's not enough. The sad reality is that, well, what I needed was something that would me, fit me trading part time, had full time job, right? 9 to 5 or 8 to 6 or 7. Uh, Oftentimes, I wanted to grow money as well. How's that going to work? Right? I don't have. I wasn't a full time Wall Street guy like ONeal was. I wanted to make gains, huge gains like he did. Right? Several hundred, several thousand%. That sounds pretty good, doesn't it? That's what attracted me. But holding through and doing the kind of legwork and research that he did, that was hard. Holding through periods where you would have a drawdown, right? Because part of what ONeal was able to do was to find the true market leader. He was able to hold on for the vast majority of the move and would be okay sitting through some bases, not all bases, not holding through some catastrophe like this one, right? You don't want to sit through and give back 100%, right? That gain, it's 40% off the peak. It's not sitting through that. But there is an important but. He would hold through some of them. And that's part of how he made gigantic gains, being in one or two names. At one point, he was in uh, just Apple and Google and was fully leveraged on those during their tremendous runs. And it was great for him. But we need to know ourselves too. What are we comfortable with? There's lots of ways to trade the Can Slim system or trade growth stocks. Mark Minervini, very similar style to ONeal, at least the types of stocks that they're looking at, but how he trades is a bit different, a bit faster, more of a swing trader, trading growth and momentum. All this from this one little caveat here, right? Nothing is either good or bad, but thinking makes it so. Don't be a feather in the wind. If you're thinking this way, you got another thing coming. Pick a side. What's it going to be? Are you going to be bullish? Are you bearish? Are you growth? Are you value? Are you more of a short-term player? Are you more of a long-term player? Right? Well, we're all looking at the same charts. Right? Well, we're all looking at the Nasdaq, the S&P 500, the Russell, the Dow. We're all looking at this stuff. Right? Here are the charts. We're all looking at the same charts. How each person interprets them is going to be a little bit different, right? Well, we're all looking at the same stuff, but what kind of a player are you? You've got to decide. You've got to take a stand on where you're going to be. And then that's how you're going to be able to build a system that's going to allow you to take advantage of this stuff. Otherwise, just a feather in the wind and all these coins just going to fall from the sky and be gone. Just found that little overlay. Had to play that. Anyhow, let's answer some questions here. What questions you guys have for me? One more thing. Let me put this up here. If you're not already on the Marrow Wealth newsletter, go get it. We've been putting out daily educational advice. One of the things that we're going to go into a little bit more, right? Well, like the purpose of the newsletter is not to talk about stuff like, oh, well, which way do I think that the market is going to go, or is SMCI a true market leader? It's not about that kind of stuff. It's more about getting your thinking right. That was weird. Other questions? Let's share the screen again. All right, then. There's no questions. Crickets. We need a little cricket emoji coming out. Maybe you guys are just all so stunned. Sure, hope so. There's plenty of people here that are watching. But for right now, if there's nothing else, then we'll call it a day. Alrighty then. For those of you that are here that stayed through it, thank you so much. I appreciate it. Make sure that you tune in for the next sessions. Click the subscribe button wherever it is that you are watching from. Make sure that you sign up to the newsletter. We are sending out daily emails with all sorts of useful information in them. And that's it, everybody. Take care. Much love. Peace out.